Welcome to ASEAN Business Report. Today is Thursday, the 22nd of September 2011, and you're with us, Anatakon Plodi.
And I'm Rina Jongprasit. Kunatagon, this morning we have seen a slump in the Asian market. And we have figures here. The Hong Kong market has fallen 4%, Japan Nikkei at 2%, and South Korea at 3.31%.
Continuing there, at Australia, the stock index fell 2.7%, and the Thailand stock exchange fell 2.4%. Now, this is not just a financial crisis because it's now becoming a banking crisis, as evident from the recent downgrades of 7 Italian banks after Italian's debt rating has been downgraded as well. Now, there's also 3 major banks in the United States which got downgraded as well.
And speaking of those 3 banks in the United States, we have here Moody's Corp has cut the debt ratings of Bank of America Corp, Wells Fargo & Co. and Citigroup Inc., saying the U.S. government is getting less comfortable with bailing out large troubled lenders. The government is more likely now than during the financial crisis to allow a large bank to fail should it become financially troubled, the ratings agency said. Moody's decision hit Bank of America hardest as it cut both the long-term and short-term debt of the holding company and long-term deposit at its lead bank. Standard & Poor's on Wednesday downgraded 7 Italian banks due to sovereign debt crisis in the region a day after it downgraded Italy's credit rating. The ratings agency cut only the short-term debt of Citigroup and limited the Wells cut to its senior debt and to deposit at its lead bank. Bank of America, the second largest U.S. bank company, is struggling with billions of dollars of mortgage losses, litigation, and stresses from the need to raise capital to meet new regulatory obligations. The risk of contagion from one failing bank to other banks have become less acute, Moody's noted, adding the Dodd-Frank financial reform law of 2010 has reduced the ties between financial institutions. Moody's signaled its review of a possible downgrade of the banks in June. Moody's downgraded Bank of America's long-term senior debt rating to Baa1 from A2 and its short-term debt rating to Prime 2 from Prime 1. Citigroup's short-term rating was cut to Prime 2 from Prime 1 as well. Moody's affirmed the long-term ratings of the third largest U.S. bank holding company at A3 and affirmed the short and long-term ratings of its Citibank subsidiary at A1 and Prime 1 respectively. Wells Fargo & Co.'s long-term rating was cut to A2 from A1, and the rating on deposits at its Wells Fargo Bank unit was cut from to AA3 to AA2. Moody's said the long-term outlook on the 3 banks' ratings remains negative.
Wall Street had tumbled after the Federal Reserve launched its long-awaited scheme to help stimulate the faltering U.S. economy, also known as Operation Twist. The Fed will spend about $400 billion buying back bonds maturing within 3 years and swapping this for longer-term debt. Although it puts no new money into the economy, it helps keep long-term interest rates down and boosts mortgage lending and loans to businesses. But a gloomy Fed warning on the U.S. economy sent the S&P 500 down 3%. The Fed said recent indicators point to continuing weakness in overall labor market conditions and the unemployment rate remains elevated. There is significant downside risk to the economic outlook, including strains in global financial markets. The Dow Jones Index closed down 2.5%, and the tech-rich Nasdaq was 2% lower. The move by the Fed comes amid deepening gloom about the global economy, with the International Monetary Fund slashing growth estimates for the U.S., Europe, and Japan. On Wednesday, the Bank of England said members of its Monetary Policy Committee had considered a new round of quantitative easing to pump money into the economy. Analysts said the Operation Twist move as larger had been expected and comes after leading Republicans this week urged the Fed not to intervene in the economy more than it already has. John Kilduff, partner at Again Capital, said the Federal Reserve has taken its next best shot at reviving the economy. The effectiveness of the twist remains to be seen, but the acknowledgement of the downside risk to the economy is in line with the recent data points and the IMF outlook. Operation Twist had been initiated once before in the 1960s, and it had been named after the dance craze of that time.
Thai Commerce Minister has urged the Bank of Thailand to keep its interest rates unchanged during its next policy meeting. Commerce Minister Kitirat Naranong as well as Finance Minister Thirachai Phuwanat Naranuban would like the central bank to keep its interest rate unchanged in order to stimulate economic growth in view of economic weakness in Europe and the United States. However, even with the BOT's continuing interest rate rise, the benchmark policy rate is still behind the inflation rate. As of August, the Thai inflation stood at 4.3% compared to 3.50% for the policy interest rate. In its last meeting, the Bank of Thailand defied the Yingluck government by going ahead to raise its policy rate by 25 basis points to 3.5% to curb inflation and also to normalize interest rate to positive yields. The Bank of Thailand will meet again next month to deliberate